All right. Well, thanks everyone for being here. We got some good news related to the PPP for small business owners on Friday that I think it addresses a lot of the major concerns that I've seen from you and other clients and just other business owners around town about implementing and making sure the PPP worked and answering a lot of the questions there. Um, One of the first major concerns that we saw was just the time frame, especially for a town like Tahoe, where we're relying on this tourist income and tourism industry that, almost everyone who received it would have seen their 8 weeks period being up by the end of this month. But I think, as we're seeing right now, that it's not reasonable to expect the Lake Tahoe economy to be up at 100% of what it was for pre-COVID-19 levels by that time frame. So one of the big changes that was made with the PPP Flexibility Act is now, instead of it being an 8-week period, is it's actually extended to a 24-week period, about 6 months. And that is huge. It's going to make it easier to spend the money, which actually goes in with another change. It's going to let you time your reopening and ramping up of scale correctly, which is also great. And it just gives business owners a lot more flexibility to effectively use the money to fit their needs. The other major concern that I've seen and that a lot of people are experiencing is it's hard to rehire some people right now. Again, especially with the nature of Tahoe's service industry, the CARES Act adjustment to boost unemployment has made it very hard for a lot of small businesses up here to compete with unemployment wages. And, we're also small businesses and we don't want to, screw over our employees. So it's put business owners in a really awkward position in a lot of these cases between trying to rehire their staff or letting their employees, enjoy some time off and enjoy the summer in this otherwise like really stressful and uncertain times while still making, a reasonable amount of money. So the change that we've seen is they expanded what we've seen on the PPP forgiveness applications they've been calling safe harbor. Now, for forgiveness, for the most cases, before the Flexibility Act, you would have needed to rehire your staff and return to pre-COVID-19 levels by June 30th. And if you did that, you would be eligible for the maximum amount of forgiveness in terms of percentages. So one change is they pushed that June 30th date to December 31st. So again, we're going to see that flexibility with ramping up and realizing that, that June 30th timeline to fully reopen the economy is not a good fit for certainly not our town and probably a lot of the rest of the country as well. But they also expanded the safe harbor in a couple other ways. So to address that issue of not being able to compete with unemployment, employees or employers can receive the maximum amount of forgiveness if they're able to, in good faith, document. And I expect we'll see what is expected for documentation when the PPP or when the SBA releases their upcoming forgiveness application. They're saying it's going to be out promptly, so I'm going to be keeping my eyes out for it, and we'll see what they have to say there. But if you're able to document an attempt to rehire employees that you had to lay off because of coronavirus, and able to document an inability to hire similarly qualified employees, and this is all before December 31st of this year. So if you're able to say, we tried to hire our staff back, we tried to hire similarly qualified people, they just weren't there. You're not going to be dinged for not reverting your payroll numbers to what they were before this crisis. The other safe harbor exemption that has been added to the PPP is if you're able to document that your business hasn't been able to operate at 100% capacity because of compliance measures. This is the important part. Lots of businesses aren't going to be able to operate at 100% capacity, but this is going to be for places like restaurants, gymnasiums, lots of public spaces which has had their capacities reduced to meet with compliance for health and safety measures. And again, we're waiting to see what sort of documentation we're going to need to prove that exactly. I expect it's going to be, you just point to something from your county, maybe receive a letter from the county Department of Health and I think it's Human Services. But I expect clarification on that documentation with the updated forgiveness application, which again, we're expecting in the next couple of days. Another major change that the Flexibility Act provides is the payroll floor. So previously, it was expected that you would spend 75% of your loan funds on payroll. And if you failed to do that, it would cap the amount of forgiveness that you're eligible for. Now that's 60%. And there's been no change to the fact that if you don't spend all your money, then you're not expected to spend that amount in payroll. That is to say, if we had a PPP loan of $10,000 and you only spend $5,000 of it, as long as $3,000 is on payroll, that would be the 60% number right there. You're eligible for the forgiveness on the full $5,000. You give the other $5,000 back. Everyone's good and happy. If you spend the full $10,000, as long as $6,000 of it was on payroll, you're good as well. Now, there's no cap on how much you can spend on payroll. So if you choose, and it would make it easier, is to spend the full 100% on payroll. Lots of businesses up here don't have that operational overhead. And with that addition of, another 4 months, another 16-week period that you're eligible to spend these expenses, it's going to be easier to hit that 100% payroll number if that's really your only major business expense. For new PPP loans being issued, they're changing the terms to be 5 years. If you've already been issued a PPP loan, you can contact your bank and renegotiate your terms to meet compliance with these new guidelines. I'm having a question here. Does it have to be at the same rate? I haven't seen anything about a change in interest rates for the PPP loans. It's just that it seems that they're giving it a longer terms to pay it back. They also extended the deferral period from 6 months to a year. I see, I misunderstood the question. So the question is, do we have to rehire our employees back at the same rate? So when you fill out the forgiveness application, you're going to be calculating full-time equivalents of your employees, and you're going to be showing what you were paying them before the COVID-19, after the COVID-19, and in those calculations, the full-time equivalency, I believe, would end up kind of reflecting at less than 1, which would affect the percentage of loan forgiveness. So in short, yes. You would be expected to hire them back at the same rates. Otherwise, yeah, I don't have the application again in front of me, but part of it is if there's a reduction in either wages, salary, or hours as a response of COVID, that's expected to be returned back up to 100%. unless you can qualify for some of the safe harbors, which at this point would be a return to normal rates by December 31st. The inability to rehire your old employees or similarly qualified people, or an inability to return to full operations because of health and safety compliance measures that your business has to take. So the deferral period for the loans has been extended to 1 year. So this is, I believe, 1 year from the disbursement of the loan is when you'll be expected to start making your first payments on it. Employers will have an option to defer their 2020 payroll taxes to 50% in 2021, and I believe it was 50% in 2022, which is really exciting. That previously wasn't open to people who were seeking PPP loan forgiveness. So that's another quick kind of cash flow boon that business owners can seek out to smooth things over in these tough times. And I believe that's all the major changes that we're seeing in the PPP Flexibility Act, which brings a lot of much needed changes. I think is going to make things a lot easier for businesses to receive the full funds of the PPP as a grant like it was intended to be. The money is going to make its hands into employees again, like it was intended to be. And the next step is going to be seeing what the SBA issues in terms of both rules and guidance, as well as the modified application for borrowers for what forgiveness looks like. And with that application, we'll see exactly what the banks and the SBA will be looking for in terms of documentation to meet the safe harbor exemptions. We've seen a little bit of what it looks like for proving payroll costs and costs for rent and other utilities. Because the period's being extended, we'll probably be using some federal tax filings to prove payroll costs, which previously wouldn't have been available at the time lots of people were applying for forgiveness. But with the extension of this to the end of the year, we will have lots of tax documents as well as just normal payroll forms. So beyond that, we'll open this up, see if anyone has questions or comments and clarifications that they want to see. So thank you, and I'm going to unmute people now, so be warned.
So I know a few people have actually been rehiring employees at a higher rate of pay, partly to compete with unemployment, partly as a sign of appreciation that they're willing to come back. Does that affect whether or not those wages are eligible for full forgiveness?
Yes, that should not affect it at all. As long as you're at 100% or greater of their wages or salary or whatever, their compensation, then you'll be eligible for the forgiveness. It's only if there's a reduction in those and it's a percentage-wise reduction in forgiveness. So if you're paying your employees 25% less, then your amount of forgiveness is basically capped at that same ratio. Unless, of course, there's one of these safe harbor exemptions, which is definitely something that businesses should be aware of and looking to see if they qualify for, because we don't want people breaking their backs trying to meet these demands.
So I guess, to me, the only people who aren't relieved by this are those who were the first people who got their PPP loans, and they spent the money you know, with the expectation that they only had 8 weeks to spend it.
Yeah.
So maybe they overpaid employees, maybe things like that. Is there any, I mean, that's just, those people are just, that's the way it is kind of thing. At least they will get full forgiveness, but.
Yes. So I believe kind of the end of May, we probably saw the very first and very fastest people beginning to apply for forgiveness. And that means, you know, they would have used their 8-week period. But in a lot of those cases, those were the same businesses that had continuing payroll demands. But yes, if they're in one of these industries that is, you know, not fully operational, they're going to have to see some kind of adjustments in their payroll back down to, you know, something that's more tenable for their operations because they no longer have this grant money to rely on. And I don't think there's kind of any recourse there for these businesses.
Has anyone actually filled out a forgiveness?
I filled one out for our business, Anik and I, that we didn't submit to the bank, but I did it as an exercise and to kind of have it ready. We're still using the fund, so we're not ready to actually apply for forgiveness. It's definitely not as easy as the loan application.
That's what I was going to ask, yeah.
Yeah, it's a little more complicated. There's a little more work. The hardest part is definitely the full-time equivalency calculations and running through that worksheet. It's kind of like filling out your taxes the old school way before, you know, you could do it online all fast and easy. You have to, you know, they put all the numbers in the boxes and they give you step-by-step instructions. There are some simplifications there that you can just treat full-time employees as a full-time employee and you can treat part-time employees as half of a full-time employee. And then, yeah, you calculate their wages. It's, I expect that that's going to be where a lot of confusion lies. But with the exemptions for safe harbor, less businesses will probably need to rely on that. We did see a lot of, with the current borrow application form, we've seen a lot of the documentation that would be required. You know, it's payroll reports from either payroll companies. It's, I believe they were even accepting bookkeepers reports for rent expenses and the similar. I'm going to continue to advocate that we try to get some kind of documented receipts for similar things and utility payments, whether it's a statement from your utilities companies or a note of receipt from your landlords. The more documentation can't hurt, but it doesn't seem to be 100% strictly speaking necessary as far as the SBA and lenders are concerned. But I really do expect that the loan forgiveness will be a clumsier rollout than the loan applications. And so I expect there'll be a lot of hiccups and hurdles there. So the easier we can make it for us and our lenders, the easier it'll be for the SBA to wave people through and say, yep, you're forgiven, you're done, you don't need to worry about this anymore. And that's what we all want, right?
Definitely. Once the money's used, can they just then go apply for the forgiveness and instead of waiting until the, you know, deadlines to hit later on in the year, to get it done sooner?
That's my understanding. The lenders themselves may have a certain restriction in there in like, hey, we're not quite ready to do this yet. We're still working on our policies. We're still ironing things out with the SBA. But I expect as soon as the SBA issues the new application, that's going to be kind of the sign that the ball's rolling and people can start looking for forgiveness. We have a question here. If forgiveness is based on the headcount of full-time employees or headcount in total, headcount in total. And the simplified calculation will be that full-time employees count as one full-time employee and part-time employees count as half-time employees. This gets into the complicated bit of the forgiveness form, and you can use that simplified calculations and see if you meet it there. If you don't, you can try for the non-simplified version, which you'd actually, calculate the ratio of if they were a full-time employee. So if you've got someone who works 10 hours, you could count them as a quarter of a full-time employee. And you could try to calculate it based on that to see if you are making your full-time equivalents back up to what it was pre-COVID numbers. And then also—
No, sorry, go ahead.
So this is another example of where you probably want to be looking at those various safe harbor exemptions, especially the two new ones, to see if you have a good reason for not being back up to your full-time equivalency as far as the SBA is concerned, because they won't hold it against you.
And my understanding is restaurants, pretty much, as long as there's restrictions to, 50% capacity, as long as there's restrictions to their capacity, post-COVID versus pre-COVID, that will qualify them for the safe harbor, right? If you can't seat as many people, then you can't be expected to need as many employees.
Yes. So if the guidance comes from the Department of Health and Human Services, the CDC, so the Center for Disease Control and Prevention, or OSHA, from March 1st to December 31st, if there were guidelines issued by any of those three agencies, and I believe the local agencies still fall under the umbrella of those larger national organizations, then you would qualify for that new safe harbor exemption, like you were saying with the restaurants, or, we're probably seeing, I can't think of another industry. Restaurants just make the most sense, but retail, we see that, no more than 4 people in the store at times. But you need an order to have come down from an actual government institution saying you can't do that. Now, OSHA is going to be a really good one too, because if you have a lot of employees, they're going to be like, well, hold on a sec, you can't put your employees at risk. Let's see. I have a question here. What should I do if I have not heard anything about my EIDL loan? So the kind of best case you can do with the EIDL is contact the SBA, give them your application number. They should be able to at least tell you the status of it, where you are in the queue of the processing. I know there was a giant backlog of it because when they issued the streamlined application, they basically took everyone who had applied with the more traditional old application, and this was before March 31st, I want to say, and had to resubmit all those people who had applied before March 31st, and they did so on March 31st. And it was something like 3 to 4 million applications went through on the 1st of April. And once they worked through their backlog, they started to get through everyone else and time by time increment basis. And I believe they have worked through that backlog, and they're starting to get to the people who actually applied, on April 2nd through whenever it was. Beyond contacting the SBA, there are more local branches of the SBA that might be able to help you and get you more information there. The Small Business Development Center is really the best course of action there. They're a partner branch of the SBA, and they're designed to work with small businesses and kind of bridge the gap between small businesses and the SBA. The other clue about your progress is the time if you've received the grant. Yeah, I'll ask Anik maybe if she can grab the EDC number for, I believe they're based out of North Lake Tahoe, kind of the Reno Truckee area. But if you've received the EIDL grant, then you know you're in the queue. That's kind of the only other clue that you might have about the process of your EIDL application. And the grant was based off of the number of employees up to 10. So if you had 1 employee, you'd get $1,000. If you had 5 employees, you would get $5,000. If you had 15 employees, you'd get $10,000. And that actually does have some relevance to the PPP. When you apply for forgiveness, they're going to ask you if you've received one of those grants and for how much. And your forgiveness amount on the PPP will be reduced by the amount of EIDL grant you got. So you only get that free money once. So if you had a PPP loan of 10,000 and EIDL advance of 2,000, your maximum forgiveness for the PPP would be 8,000. The SBA is going to be like, look, we already gave you 2,000 for free in kind of an emergency situation. Consider that part of the forgiveness. Give us the other 2,000 back. Yeah, the more free money people are getting, the better. Though we're seeing some of the issues with that. That's why some employers are having such a hard time rehiring employees, because unemployment's paying pretty well right now. I believe the calculation was if you're making somewhere between 20,000 and 40,000, you're basically breaking even to making more money on unemployment. It depends on the states, but that can be a good thing for businesses too, because as we look to reopen, we want to make sure people are flush with cash, that they have really fat wallets, that they're taking this unemployment money and they're holding on to it while they can't spend it. And as soon as they can, they're looking to start giving it to us, the business owners of America. So that way we can use it to pay our employees and they can go out and buy more stuff, et cetera, et cetera, et cetera. And we get a lot of use out of those dollars. That's what everyone's really hoping to see there. Hold the floor open for a little bit longer if anyone else has any other questions.
So I just posted the information, the phone number to call the SBA if you have questions about your loan. Oh, and apparently we've got another phone number we can use.
Yeah, this will be for the small business development. Is it center? Yes, center. This is our branch. They're apparently located by the Truckee Airport. So kind of right along that routing corridor.
Oh, jeez.
Yeah, so the difference between the PPP loan and the SBA loan, the SBA has traditionally provided emergency loans. These are most common. In California, we saw an example of this last year with the wildfires, where those wildfires caused an interruption in business, a loss of property or inventory or similar damages, whether it was physical or economic damages. The SBA would be there to provide these emergency, disaster loans. So that program was expanded for coronavirus, which became a national emergency, and that's what we know as the EIDL. The EIDL being an economic injury disaster loan. These are to help businesses maintain operational funds when their revenue streams have been disrupted because of the economic injury caused by the disaster. The only forgivable part of these loans is the grant. But as I was talking about earlier, you can't double up that grant with PPP forgiveness. But the advantage of the EIDLs is they're typically offered on very favorable terms. I believe they were offering it at 3.75% interest rates, and the loan maturity was determined on a case-by-case basis, but it's been somewhere from 5 to 30 years of terms on these loans, and there's no prepayment penalties. You know, if you're taking a 30-year loan, you're accumulating a lot of an interest expense in exchange for low payments. And if you decide, you know, your business is resumed, you've got the money, you can then pay it back and eliminate that extra interest expense. And then the PPP was the separate program that, the other thing with the EIDL is they were being issued directly from the SBA. With the PPP, they work through your banks. So if you were borrowing money from your traditional bank and financial institution, or if you had to reach out to a different one because of the gigantic backlog and nutty mess that it was at the time, if you were borrowing from some kind of financial institution like that, then you have the PPP. And that is what we'll be looking for the forgiveness based on payroll amounts. And you would also have to prove that you spent it on payroll, utilities, rent, and a mortgage interest that predated coronavirus are the 4 eligible expenses for the PPP. The EIDL is more general in what you can spend it on because it's supposed to bridge operational cash flow for businesses that have been injured by the disaster.
Awesome. Can we think of anything else that either our clients have been asking about? I know, Rachel, you you probably are getting client questions too.
Yeah, definitely. I'm just trying to keep track of, I have on a piece of paper, like when the people got their loans. Well, now it's all changed because everything got extended, right? But I was keeping track of like the exact date they got the money, and then I was trying to figure out 8 weeks, and now I don't have to do that, right? But do we have to go, did they each have to go back now and ask for that new extension to the year, or is that going to be an automatic thing because it got signed in at a higher power?
What they have to go back and ask for is a renegotiation of the terms of the loan if they want the 5-year maturity.
Okay.
So for the part that's not forgivable, basically, is what they have to renegotiate. So if we manage to spend all of the PPP loan, we don't have to bother renegotiating the terms of the loan because we'll have it all forgiven.
Yeah.
That's theoretically.
But all these other changes are applied top down. It's just a matter of the forgiveness application, and the deadlines for that have all changed. What they'll need for their application will change. But if, yes, they're expecting to carry some of the loan as debt because they won't make full forgiveness and they want to spread it out over a longer term, that's when you go to your bank and be like, hey, this all just changed. They're saying it's a 5-year minimum. They're saying we're supposed to renegotiate and agree to meet the new terms of the law. I have yet to see anyone have that conversation. I don't know how banks are feeling about it. I don't know how I expect banks to respond.